Money can grow one meh?
Hello everyone, I'm Melanie.
Yeah, I'm Iylia.
And we're here today for a segment that we call
Got Investment Sense Boh.
So I will ask you 7 questions. All you
Yep.
have to do is to answer true or false. Simple as that. So if you get more than half of the questions correct, we will crown him. Da-da-da-da. I don't know why he has the crown already. But
Preordained.
however, if you do not, you will get investment joker hat. So let's see what you will end up with. And he will have to wear this for the rest of the day and walk around proudly with it. Okay? Sounds
Okay.
exciting? Okay, let's go. So the first question, investment is for those who can afford it.
I think it's true. Because I think that we kind of want to pay whatever debt we have, whatever we are spending on, whatever we need on a day-to-day. So after that, then maybe once we earn higher enough, then actually we can start investing in it.
Well, it's false. You can actually start investing with just a little bit of savings.
But what do I need? I mean, if I want to start, then how do I start doing it then?
I guess even if you only take home a little bit, you can portion about 10%. Just make sure you have no debts and you can pay off things that you need to pay off, like maybe your insurance premiums.
Okay.
Yeah.
And how much, if I were to, how much should I save, in case of, emergency, if I want to do this kind of things?
For your emergency,
Yep.
probably about 3 to 6 months.
Okay.
That should be pretty comfortable. Oh yeah, and here's a tip for you.
There's more.
Invest early.
Why though?
You never listen in class, right?
I do.
Last time in school, people teach you about compound interest.
More or less something. You can explain more.
So, compound interest is when you put a money and it continues to grow at a certain rate. And when this money earns more money, it continues to grow and grow and grow. Yeah, so start early. You have no liabilities, you have less things to pay off. So, it's a good start.
Tomorrow morning, first thing I'll do.
Okay, second question.
Okay.
Investing is the same as putting money in the bank regularly.
No. I think the answer is no, because I don't do that. I put my money elsewhere. So, bank is for me to save my money and get my money from wherever I work, and then investment is somewhere else.
Okay, I guess he's correct.
Yes.
Investment and savings
Yep.
are 2 separate matters.
Why?
In a recent survey, 41% of youths who think that they have minimal knowledge of investment think that saving in your bank account is the same as investing. And they consider that they are already investing. Investing is about beating the inflation and interest from the savings account. Maybe lower the inflation, making your money worth less over time.
No, that's interesting. I never thought about it that way.
So if you think about it, let's say your bank gives you 1%.
Okay?
Okay? And then
1%.
your inflation is 2%.
2%.
So you're not beating inflation, you're not
you got
exactly
1%.
getting any more returns on
Not
your
worth it.
money.
Okay, fair point.
So, Iylia, you said you save money in the bank and
Yep.
you also invest.
Yep.
Tell us what are some things that you invest.
So there are few that I invest in, but the 2 main ones are basically the Singapore saving bonds and at the same time the diversified exchange traded funds. So those are my 2 ones that I really put most of my funds towards.
Classic role model. So your diversified exchange traded funds and your Singapore savings bonds actually can offer better returns than what is offered by your bank accounts, which offer a fixed interest rate. However, of course, these products carry innate risk as well. So, third question.
So
All investments carry risk of losses.
100% all investment do carry risk, because if it carries no risk, everyone will invest in it. So if you put $10 inside it, everyone will get $20, $30 or even $15. But no, right? Some people actually gain $5, even as low as $1. So I think it's true. It does carry risk.
You are absolutely right. So all investments can carry risk of losses. You could lose some, or you could use all your money. Market fluctuations are uncertain and unpredictable.
So, okay, since we've talked about my investment, how about your investment? What do you invest in?
Well, it depends on my risk profile. It can be high risk, low risk, medium risk. And with different risk profiles, I can also tolerate different levels of losses. Higher risk, higher potential returns.
Okay, so now that's the what, right? So now comes to the how. How do you invest? Do you like put everything into like me, I put in mini two. How do you do it?
Here's the model answer. So you have to diversify, which is exactly what you said you did, right? Your diversified ETFs and your Singapore savings bonds.
Yep.
If you diversify, you spread the risk across different instruments that you're invested in.
True.
Fourth question.
Fourth.
You need to know all the investment products in the market before you can invest to make the best decision.
Actually, unlike popular belief, you don't need to know everything because it kind of causes the problem of analysis paralysis, whereby you start learning about everything and then you are not able to make a proper decision on what you want to do. But at the same time, you cannot go in blind. You cannot just put your money in a place that you have no knowledge of. So I think it's true that you need to have knowledge, but at the same time, to answer your question, it's false.
He is very right. There is this thing called analysis paralysis. Actually, in a recent survey done by OP, 79% of the respondents actually mentioned that they actually do a lot of prep work before they start their investment journey. So to guide your thinking process, I have 2 guiding principles or questions that you can ask yourself.
And I think I know one of them. So here's the first point, right? Like you mentioned just now. So risk is a very important thing, right? So if you're looking at something like, you're starting a new family, you're paying for big item, ticket item. So it's better to have those with lesser risk, and those basically are from those with the short-term investments rather than the longer-term ones.
That's right, you've been paying attention. So on top of risk, second point, what are your investment goals? It could be like what you want to achieve in a few years. So it matters how long you want to achieve and how much you want to achieve. Maybe you want to earn more, maximize your returns, or maybe you just want to make sure that you don't lose out on this amount of money that you already have accumulated. So it depends on your investment goals.
So it's also risk is a big player, huh? Let's summarize all of that in 2 sentences. So how will you do that?
Okay, so let's look at our short-term goals.
Okay.
If you have short to medium-term goals, say for example, you're going to pay for your first down payment for your house, for example.
True.
You can invest in instruments like your Singapore savings bonds.
Okay, that's something
And
I do.
if you have longer-term investments, maybe taking care of your parents, and then as they get older, you also want to continue to take care of them. So you already have your diversified exchange-traded funds.
So I have both short-term and long-term.
You are
Solid.
well covered.
So we've come to midway. How do I fare so far?
You are actually doing pretty well.
Solid.
Yeah, 3 out of 4 questions correct.
Close to becoming a king.
Yes, just
Yes.
one more question.
And I'll be a king already. I get a crown.
You can put in your LinkedIn title, King of Investments. So moving on,
Okay, let's do
fifth
this.
question. Financial tips from Finfluencers should be taken with a pinch of salt.
I definitely agree with you. I think we should definitely take it with a pinch of salt because I think not all the informations are being provided when they are actually selling whatever they are selling. So yeah, I think it's true.
You are
The
right.
king of investment now.
But wait up. Okay, so Finfluencers are not necessarily financial advisors. Authorized financial advisors have a unique representation number given by the Monetary Authority of Singapore, or MAS. You can actually check them out on MAS whether they are legit.
Oh, that's interesting because now, right, there's a lot of influencers. They're actually sharing all the good parts of it, the benefits, the high returns, the barely any risk, and that we kind of have to invest fast and now. So how does one balance that then?
You're right. So, some of them are actually paid to promote certain products. Sometimes they might just want to speak from their experience or some tips that they have and they just want to see whether it works. There are also times when it's kind of like scammy influencers and they'll rush you to make a decision. So always remember, your investment decisions should not be done hastily.
Scamfluencers.
We are on to our 6th question and you are already the king. But I'm still going to ask you the question.
Go ahead.
Knowing when to buy or sell or timing the market is the best way to invest.
I think timing is important though, so I think I'll go with timing.
You're wrong! Okay, no, I don't mean to laugh at you. It's okay.
Okay, why?
Let me tell you why.
Go
Even the experts in the field find it a very difficult thing to do to time the market. You will not be able to earn significant returns just by this method alone.
Then how can we do it?
In fact, there's another method out there called dollar cost averaging.
What's that?
It's basically to invest the same amount of money at a regular frequency, regardless of whether the market is going up or going down. Chances are, actually you'll be buying more when the prices are low and buying fewer when the prices are high.
So essentially what you're telling me is, to sum up everything, right? Take 10% of whatever I have saved and then putting it into a diversified ETF and then use the dollar cost averaging method. Am I right?
Yes, that's
So it's that simple.
So for the final question of the day, investing is difficult.
Can I add in the fact that anything good is also can be difficult? But I think investment was actually quite difficult. When you first start, it can be quite daunting. But after a while, with much education, much research, much experience, it became much easier.
Actually, there are resources out there to help first-time investors. Money Sense is a national financial education program that provides resources for new investors. In fact, they have a 6-step guide that can help new investors to start on their journey. And since you are the king of investments now, right? I think you are pretty familiar with these 6 steps.
So I guess step 1 is basically having 3 to 6 months of your funds as an emergency expense in the event that something happens at home. So do save that money first.
And for step 2 is to decide for your emergency funds how much you want to portion to put into your savings account and how much to put into Singapore savings bonds.
Step 3 is basically setting an investment goal. So by doing that is to actually put 10% of whatever you take home and actually investing in either short-term goals such as SSBs or long-term goals such as diversified ETFs.
And for step 4 is to open a central depository account in order for you to start investing, to buy Singapore savings bonds, and in order to buy diversified ETFs, you will also need an MAS regulated brokerage account.
So step 5 is basically purchasing SSBs through internet banking or ATMs, or you can buy diversified ETFs through the different brokerages, industries or countries.
And step 6 is to repeat step 5 but at regular intervals. You can do it monthly, quarterly or annually. It's totally up to you. Actually, some of the MAS regulated broker accounts do help to automate this process as well. So it's as simple as these 6 steps. We have come to the end of our segment for today. And we all know Iylia is the king of investments over
Solid.
here. So right now, we're going to present him with his well-deserved King of Investment title and crown.
Thank you.
Very proudly.
Of course.
Thank you for staying with us and for watching the crowning of our King of Investments. We hope that you've learned a thing or two and you are better equipped to have better control over your finances.
For more tips and tricks, head on to Money Sense website or Instagram page.
Bye-bye!